What's going on, everybody? Jeff here. Welcome back to the channel. A lot to talk about today. But before we get into it, I had mentioned in my previous video that the small caps might be starting their cycle again, something we haven't seen really since October. We had a little bit of the Thanksgiving turkey crack run, but I've always mentioned that the market runs in cycles. And you remember, we haven't seen these small cap, low float stocks running hard like they did last year. All right, and I'm talking about these small stocks that are running, 60, 70, 80, even 200% intraday. And in my experience, when you start to see a few consecutive days where these small caps are running hard, it can be a big indication that the cycle is going to start. And I've tried to make everybody aware about this so you don't wait until everybody's talking about it on Twitter and we're already, 2/3 or 3/4 of the way through the cycle. So today, this is ticker symbol AGRI. It actually was not on my pre-market list. Somebody else had brought it in the room just before 10 o'clock, 30 minutes after the open. We got in on this between 250 and 260. And as you can see that by looking at the charts and the heavy volume, smooth sailing all the way up to over $5. So keep your eyes open for when you start to see these small caps. It's been a little while since we see them run hard. And like I said, it can be an indication on the cycle starting. But let's talk about exactly what happened today. CPI numbers were released 0.8% higher, a total of 7.9% for inflation. All right, now some of us do think those numbers are brought down a little bit. And just to think about, this really hasn't even factored on all of the price increases that we've seen since Russia invaded Ukraine. If you take a look at the national average gas price currently today, we're sitting at $4.31. A week ago, which was still in March, we're at $3.72, and about a month ago, it was about $3.47. So you could figure probably about the end of February, which is where those numbers are calculated from. You figure gas was probably about $3.60 to $3.65 a gallon. Now it's up even more than 10% than that, as well as all of the sanctions, okay, that every country has put on Russia. That is really just bringing up the price of everything. You can expect, gas to, the fuel to, really hit next month's CPI, as well as food, because the fertilizer prices have gone up well over 100%. And all the crops that are grown here inside the states and that we do get from other surrounding states are going to go up a lot. So expect those numbers to continue to increase going forward. One thing I will point out, if you take a look at /CL, these are the crude oil futures, all right? And we did hit a high of about $130 a barrel. Now we're sitting at about $105, $106 a barrel. So it has come down a little bit, still very elevated. I am going to make a video very shortly on what to expect in the next 12 to 24 months and what has happened in history when oil has spiked like this. What are the the repercussions that we pay for down the road. All right, so keep an eye on that going forward. Take one quick look at SPY. We are still very choppy. You see some of these critical levels I have that are mostly on the hourly chart and the 15-minute chart. It seems like those trends are holding very well, playing some of those pivots. Guys, there's a lot of fake outs happening and we're really still trying to find direction. You can see this trend is still downtrending. We haven't really broke above that. Okay, we're gonna really need to see a good spike back over 440 to possibly retest that 454, okay, or 459 levels. I'd mentioned previously, I don't really quite factor that the bottom is in yet for the SPY. As you can see, where we are about to close today, sitting about that 426, if you look over here, I'll zoom in a little bit for everybody to give you guys an idea, up between 427 and 430. All right, this is one very, very strong support. All right, so you can look at that to possibly act as resistance going forward. We did wick off that as of yesterday. Okay, so keep a close eye on that. Now, let's talk all about AMC because I haven't covered it in a little while. I will point this out to you guys. The short interest is still very high, sitting at over 800 million shares. When you look at exactly what is happening with the price action, okay, it is completely being taken down, one, by the market and just simple algorithms trading this back and forth. I've added this chart to my 50, 100, and 200 moving day average chart. I normally don't trade off of this chart. I've just been showing you guys the moving averages, since I started following AMC months ago and I decided to continue with it. But it shows right here that the volume today was 24 million shares. The average is about 48 million shares. Okay, so naturally the volume is insanely low. And even when you think about this, okay, the average daily volume right now is about 50 million shares. Okay, we know there's 500 million shares out in circulation that are actually, legal, okay, and published to be traded on. And if you think 90% is owned by retail, well, what's happening is these algos are just trading, that 10%, whatever they're borrowing on loan, whatever is shorted, and they're literally just rapidly trading it back and forth, bringing the price down, including by all of the funds, okay, that own AMC. Well, the funds are down right now, all right? If you look at IWM, it's down. Everything's pulling the price down. Couple things I will point out, all right, is there are some positive actions happening later in the options chain. I will make a more strategic and focused video talking all about that. But something I noticed today is we actually saw a little bit of change in the media, which we hadn't seen, okay, since, well, we saw a little bit in September. We really haven't seen since that May area of June. But AMC Entertainment has stopped burning cash, which should help AMC stock. AMC stock could move substantially higher over the next 2 years, putting out that time frame. All right, and keep in mind, because the next article I'm going to show you guys also has that time frame. But this, article just talks, it's very briefly about where AMC stands, talking about everything that Adam Aron had basically mentioned on his call last earnings. Okay, what has changed? What's better? All right, and especially that positive free cash flow. Okay, and that they're paying less on their debt, less interest on their debt. That was key because all the revenue that was coming in, I think it was something close to 46%, right, was going towards that interest. And it's just like, getting into massive credit card debt, and it gets to a point to where you can only make the minimum payment. You're at a position where you can it's going to take forever to get yourself out of that debt. And this is where AMC has really changed things going forward. And it seems like, analysts are starting to view it a little bit differently. But like I said, because the market is in that, heavily, fearful, volatile state right now, it is suppressing the price a little bit. And we also look at our friends over here. AMC revenue explodes nearly tenfold. Same thing, talking about revenue, talking about, new blockbuster hits inside the AMC theater. Spider-Man, okay, was hit on this, focusing again on the increase, by 11% per visitor, okay, which is good. They were spending more money while being inside the theater. And also their beverage and food expansions. Like obviously we're talking about, potential popcorn revenue going forward. Same thing right here. This article highlights this as well. It's down over 15% since releasing its earnings. As you may recall, the company was part of a meme stock frenzy in 2021 that sent the shares soaring, and it's going to take several more quarters of improving fundamentals to bring it back to those previous highs. A little bit of change in tone, saying it'll never go back to those previous highs, which we've seen before. And it's the same thing, putting out that time frame, okay? Just like that last article did, putting out that time frame. So keep that in mind going forward. A couple things I will mention when it comes to the chart is we are still channeling very tightly. Okay, if you can see at the top of this channel, which we did hit in the February 10th. Okay, when we started the year, all right, when we got down to that, it was January 6th where we really broke into this channel. All right, and if you can see exactly where we are, just moving back and forth, and what the entire market has done since that January 6th, the start of the year, this is a big difference. AMC is holding up when it comes to relative strength on the entire market. I know, like some of you guys like, oh, the price is at $15 right now. But when you look at how it's holding up relatively to the entire market, okay, since the start of the year, this chart looks a lot cleaner than many other stocks. Okay, so think about that going forward. Another thing I will mention when we talk about the institutional ownership is this, this 1450 level holding very, very strong support going forward. And if you remember, that 50 level was critical to get over before, okay, that June run up. So it could be just a lot of funds really adding to that buying pressure, trying to hold the price above that going forward. Completely speculative. But guys, that is it for this video. See you in the next one.